Trading is actually very simple. We just overcomplicate it, especially if you're doing smart money concepts. It's not rocket science. It's about understanding basic human psychology and cutting through the noise. In this 20-minute video, I will prove to you that basic level plotting will yield you a better result than your complicated strategies, and also give you a full breakdown on how to do so. Over the past 5-6 months, I've been sharing my trades publicly, and they have had over an 85% win rate. And I plot levels this exact same way. It's stupid simple, but it fucking works. What do I mean by noise? Well, essentially anything that can cloud your judgment and your decision making, which can give you contradicting thoughts, which leads to analysis paralysis or stunts your growth, distracts you from the bigger picture, and stops you from learning. Basically, smart money concepts. I'm not saying smart money concepts doesn't work. All I'm saying is a strong mindset beats a strong strategy. That's why some smart money concept traders do make it, but the whole smart money concept bullshit is way too overcomplicated where it doesn't need to be. What defines if someone is profitable or not is their psychology, is the self-awareness and self-control. So if you can keep the technical trading as simple as possible, stupid simple. So if you can keep the technical trading stupid simple, you can focus on your mindset, on the discipline, on self-control, and things that will actually make you profitable. Let's jump straight into it and I'll show you exactly what I mean. So before I start, I will kind of show you what to expect. On the daily and weekly time frame, you see price do something like this. It trends one way, then trends another. What you tend to see is on the weekly time frame, where the trend starts, that is what you'll class as a weekly level or a strong level. And let's say that price was coming down from here. This would also be a strong level, and in between the strong levels you'll have a bunch of daily levels. Daily levels are essentially just levels where there's just been pullbacks and a continuation of the overall trend. And in between the daily levels, would you guess, it's 4-hour levels. Now I don't trade anything below daily realistically. I rarely plot 4-hour levels. The most common one is a daily level, and sometimes you'll see the weekly levels. For this exercise, I'm going to look at cable on the weekly time frame. Now you do need to understand that because this is a video, I can't show you live examples where you pick any price on the charts and I'll show you how it works. You can plot it and see that it works, and it works fucking well on almost any pair. You can also join my Discord, and I share my trades for free week in, week out, and I plot these levels this exact same way. So I'm only going to look at anything past this line, and you're free to join my Discord and send me charts and I'll plot them and see what I think. So on the weekly time frame, this would be a weekly level, and the reason for that is ever since we touched this level, we were bearish for over 1,000 pips for around 2 months. So of course that is a trend, and it's been bearish for 2 months. You would class that as a start of a trend, and especially because of how big this move has been. 1,000 pips is quite big for cable. And then from over here, then price started pushing higher. And the reason this is a weekly level is because this weekly level has been breached and now we're pushing higher. And then in between, there's a bunch of daily levels. Now, for the sake of this as well, I'm going to look at all of these levels. So I'm going to look at potential sell levels. So imagine price is down here, and it could come up. You're looking at all the sell levels if it does come up, and all the buy levels if it goes down. We know it doesn't go down, but it's the exact same process, where this would be a zone, this would be a zone, which has worked, but we'll just look at sell case scenarios. So first of all, we'll start from here and work our way down, and I'm going to plot every single level that I see. And let's make this purple. So the daily levels will be purple. This is a daily level over here. This level over here. There is a weak level over here. There's a level over here as well. And the reason for that is, look, price pushed down. It had a pullback and a continuation. This is where it had the pullback from. This is what a daily level is. And obviously, the bigger the pullback, the stronger the level. So these are all levels. This is a level. And I'm going to plot every single level I see without even thinking much. So this is a level. There is a weak level over here, and I would class this as a 4-hour level, because if you go into the 4-hour and you look at this, see, it's barely a 4-hour level. It's not a daily. On the daily, Yes, it's one candles, but it's not strong enough for me to class it as a daily. Even this is a weak daily level. This again is, I would class it as a 4 hour level. Now it might be a daily level to you. Remember, everything is subjective, but if the reason we categorize these is for data collection, so it doesn't really matter if you class a daily level as a 4 hour level. It would be better for the data collection, but over a big enough data set, as long as you apply it the exact same way, it will show you what works for you, tailored to yourself. And then if you just get rid of this on the way up, this level worked. This level did work as well. This level, I would say, had a very, very limited pullback, but it didn't work. This level worked. Let's see if it worked further on. This worked. This as well, it did work. It delivered around 50 pips. I remember because I took this trade and I shared it on my Instagram. So all bar one, which was a weak level, delivered the moves. And another one thing to keep in mind is if there's a sharp move into a zone, it makes sense for it to work, especially if the zone before didn't work. Now, this a sharp move up could have been a fundamental push, but if there was no pullback over here, it makes sense for a pullback on the next obvious level because you have to kind of apply the logic of what would big money do? Where would they cash their positions? And price action tells you that. If price was having if it was coming up and it had a pullback on this level, then the odds of this level isn't great. But because there was no pullback here or over here, if you are a hedge fund manager or a big institutional trader and you're up millions in profits when price is going up, and you didn't cash here or here, it makes sense to cash some of the position over here. It would be stupid not to, not your whole position. I mean, some people might even be selling it, but that exchange is what causes that pullback. And when that pullback happens, you cash most of your position because that initial move is very likely, and you leave a runner because then if it keeps going, you can counter with the runner. But again, this video is not for runners, it's about the levels. So always try apply that logic. What would big money do? And another thing, another tip that I would tell you is whenever you're plotting a level, never go right at the tip of the level. So never go right at the top. Always go a few, like 5 or 10 pips beforehand, usually. And there's different ways to do this. But let's say if you've got a confluence just a bit below, then put it on the confluence. If not, put it at least 5, 10 pips before. So it's like this level, you would never go for the top. You would go for over here because imagine if price is coming up and people start big money starts cashing over here and the pullback happens just a bit before the level did work, you just didn't capitalize because you missed out. For the sake of a few pips, you've now missed a 100 pip move. And now that let's say we've started to push lower from over here, let's look at potential sell zones. So we'll look at all this we'll look at all potential buy zones once price started pushing lower. So straight away this would be, I mean, these aren't the strongest levels, but it is a level over here. This over here is a level. This would be kind of a level, and I'll explain how I would approach these zones as well. And then you just look back. So you always look at the most recent price action. Imagine we're coming down, we look left. So this is what price would be looking at. It would be looking at over here. It won't be looking through the price. It would be looking at how price has been reacting when it was last there. And this pullback, yeah, we saw some slippage, we saw some drawdown. Maybe you could even class this 4 hour level. Maybe there's a 4 hour level there where it went off, or maybe there was a fib. Let's plot a fib actually, and let's see. And as you can see, there was a fib over here. It went off the 38, and it would be stupid to buy on this zone. So it'd be stupid to buy in over here and not consider the 38 fib. And also there's a round number over here as well. So you've already got 3 confluences, and this is how wide the zone is. Maybe you can refine it, and if it's good enough, that could be a trade. Now, when you do have zones like this, so like where there's 2 over here and right below there's another one, well, there's a few ways to trade it. And if you join my Discord, whenever there's cases like this in live market conditions, I explain how I plan to take them. But if there's a pullback from the top zone, I disregard the bottom. If it smashes the top zone, then I'll take the bottom. And sometimes I'll even disregard the top unless there's additional, I'll disregard the top unless there's more reason to take it. such as alignment or timing. And if not, I just wait for a smash to take my zone, because if this one doesn't deliver, then the odds of the lower one delivering are a bit higher. And also there is a 50 fib, so that would be a zone which didn't deliver because the profit taking you're looking at for this area happened over here, and you could even say that it slightly just missed. But that profit taking move that you were looking for has occurred. And then after that, what determines if this zone is to give midterm or longer term direction is if the fight between, if buyers overpower sellers. And it's harder to kind of predict that, but it's a lot easier to predict that profit taking move, that initial pullback where you cash most of your position and you leave a runner. And then past that, there is a zone over here, which it did not deliver one bit, and this zone, and it went off the middle. So yeah, this would be quite an unfortunate one. If we plot any fibs, did it go off any fibs? This zone would have been a zone. I mean, it just missed, and it did miss by 8 pips. It did 8.75, so I would consider this a miss. So you wouldn't have caught this trade, but you technically wouldn't have lost much as well. And then the same shit applies. If price is pushing higher, where would big money take partials? This is a weak zone. If it doesn't deliver over here, this is the next zone. I mean, you could say this next zone delivered. Let's see how did this zone deliver. There was a small profit taking move. Again, this is why you cash most of your position. You leave a runner because it's easy to predict this little pullback. It's harder to predict the bigger move. So you close 90% of your position when that initial pullback does happen. And then let's look at this. This zone delivered. This zone again delivered. So it's not so already you can see through something which is very elementary, not complicated one bit, everything is delivering. I would consider this a miss, even though there is a round number over here. Now, already you can see I've not taken my time with this. I haven't taken into account fundamentals. I don't know what's driving the market when price was moving in the past, but already you can see most of these zones work. Now, imagine if you take your time with these, you take into account what's driving the market, you avoid fundamental trade, you apply that logic, you have other reasons which increases your odds of success. Why do smart money concepts? Why do something complicated when this shit works? Remember, this is just key levels. I don't trade just key levels. I add everything on top of it, but this is the foundation to my technical trading. This is the foundation to my pattern recognition, which makes it easy for the decision making. There's trading is in two parts, pattern recognition and decision making. This is part of pattern recognition, but it also helps with the decision making because you're not using, so our minds have a very limited budget of effort. You're allocating that effort into all of these complicated narratives and this very complicated way to see the markets. Mine is stupid simple. Ignorance is bliss. It's very, very easy, very systematic. It leaves very less room for thinking. Yeah, sometimes you might categorize a daily level as a 4-hour level. It's still a fucking level. You then add everything on top of that. You plot your levels. It's a very systemized way of doing it. You plot your levels, you plot everything on top. Then you start up. It's like you start layering everything on top. But every layer has got its own approach. It's a very systematic approach. But you don't think my whole effort is just to make sure that I'm not a cunt and I'm not following my plan. So I'm allocating all my effort into the decision making, into the whole process, instead of making everything complicated. I hope this does give you an idea of how it doesn't need to be complicated. I've done this exercise with people who have no prior experience of trading, and within an hour or two, they're plotting levels accurately. Most of them are working. So it's good to do this because then when you come to a time where everything is confusing, you can fall back. Okay, you can think, look, in terms of technical trading, key levels is the strongest. Let me plot all the key levels and then build everything on top of it. Because when I did first plot key levels without anything, they were working, so they're likely to work now, if that makes sense. Now remember, this is a video. I can't show you examples on live market. I will do that in my Discord. The link is in the description. Hopefully this did kind of simplify your technical trading. Hopefully, this did nudge you in the right direction of keeping shit fucking stupid simple and focusing on the psychology